It's Rob here. I wanted to do a quick recap of my GU trade today, what I was looking at, and why I entered where I entered, and pretty much just a top-down analysis to show you guys how I view the market. A lot of people that trade this concept might view it slightly different, but for the most part, it's very close. So if we just go to the 4 hour quickly, um, we're obviously very bullish on the 4 hour, and even though we have this complex pullback, you can basically say we're bullish on the 4 hour till we get a body close below these wicks. So as of right now, I'm bullish on the 4 hour. That's what it was like when I got to the charts this morning. Next, we obviously identify our 4 hour demand, which is these wicks refined. You got your liquidity inducement here. On the 15 minute, things got a little weird today, but they were I'll explain them here. So this is your 15-minute high here, this red line. This is your 15-minute low. We're obviously making lower lows. You got another high, you got another low, so we're bearish. Now here, GU decides to make a new high. Now at this point, you are bullish, but unconfirmed. For this to be confirmed bullish, we need a lower high, or a higher low, I mean, and a higher high. Basically, you need two new highs for it to be confirmed. But instead of that, what GU does is puts in another low, taking out the previous low, making us bearish again. And we were confirmed bearish. So to me, as of right now, we are confirmed bearish. And by the time I got to the charts, GU had made one more high and took out this previous structure. So now you're bullish but unconfirmed, meaning for GU to actually turn bullish on the 15, we need to get another candle body close on the 15 above this red line, which we did not get. And I was actually looking to maybe buy GU from here, but I'll talk about that in a second here. So the next thing we got going on the 15, at least what I look at, is we created a high here. We had a pullback, which is kind of this little round squiggly line thing I drew. And this swing low here at this point should have made another high above this 15-minute. And at that point, when this swing low failed to put in a high, this low becomes weak and this low gets run. We get a bearish engulfing candle here. We get a candle body close that takes out this swing point, and that's what I call a failed reaction. We failed to make a new high. And the other confirmation we have here is these wicks here. I consider this a demand zone. To me, this is the demand zone that broke the structure, the sell to buy wicks. Either one's valid. This is a reaction point and this is a reaction point. If you're going to buy, obviously this would be the better place to buy from as it's better priced. We come down here and we ultimately react off another demand. So myself, whenever I see a clean candle push up like this and a clean candle push down, if there's just clean candle bodies, I'll look to the left of the candle bodies and I'll usually pull either the block or the wicks and I pull them across. I think ICT calls them like breaker blocks or some shit, I forget. But anyway, that is what our reaction here is. And ultimately, what we're looking for is, like I said, I was looking to buy down here or I was looking to sell up here. We do have a fib that I'll show you guys on the 1 minute and I'll show you guys how I use it. So basically, this is kind of where we were at when I started looking at GU and started considering shorting it. As soon as we failed here, you got a bearish engulfing. At this point now, I want to short it. Initially, my short bias was only to here since we made another high. And I'll show you guys how I manage that as well. So moving on to the 1 minute structure. Oh, hold on. Let's try that again. Moving on to the 1 minute structure. So this is, over here we have our fib. every line is basically 25%. So you have 75, 50, and 25%. I pulled it from the bottom of this leg to the top of this leg, and ultimately what we're trying to do is we're trying to sell above the 50% of the fib. So we're selling in a premium, or we're buying below 50% and buying at a discount. Basically, you're getting a better price for your investment. And whenever price is around the 50% mark itself, which is where this kind of reacted off. If you guys remember the zone I pulled here, these wicks happen to be right around the 50% zone. That is the do not fucking touch zone. Stay away from there. More often than not, you'll get wiped out and become liquidity. We want to be well below the 50 or well above the 50, depending if you're selling or buying. But that is where our reaction happened. Now, something I want you guys to pay attention to is look how aggressive this move down was. We came down quite quick. It didn't take long. In the same way how aggressive this move up was, it was very aggressive. It was really fast. We had a bunch of corrective consolidation here. Well, the same thing happens here too. When we tap that area, which is that demand I pulled across the candles, look at the way we reacted. We went up, we came down, we mitigated this whole area. So when mitigation happened, to me now, I'm like, okay, this price is moving up very correctively, meaning we're moving up really slow and we're mitigating everything on the way up. So now what I consider this to me is trendline liquidity. We went up correctively, and the reason we went up correctively and mitigated everything is so that we could come down through it without a whole lot of trouble. Now, something Phantom teaches is a what they call a change of character, and that's our Chach lines. And essentially, you want to pair that with a couple confluences. So in this case, we had the failed reaction, we had the bearish engulfing, and we had the demand failing as well. And the next thing we had is the bullishness was unconfirmed. So it's always good to have a buy and a sell scenario in a case like this. So this was our sell scenario. And the way that worked out is we got our change of character. Now, change of character ultimately is what we're looking to do is when we're going up, we're continuously making new highs. Here we made one last high. We're in the 15 supply that I got drawn out. And inside the 15 supply, what actually happened, rather than us respecting this demand zone down here, we came through it and we actually went past this. So what happened here is we swept the highs, we swept the lows, and ultimately demand lost control. And once demand lost control, supply takes control, and we have what you call a demand to supply flip, D to S flip. And ultimately, this became a valid zone for me to now sell off of. And that's how I framed out this trade. Now, being that we did make this high, and there was still possibility for this to continue going higher as it came down and hit this demand down here. We wanted to manage our trade aggressively. So myself, what did we use? So we had a 1.9 pips stop on that. And as soon as I hit 4R, what I do is right around here somewhere, I will close 20% of my position. And what that does is that removes my risk from the market. I do not move my stop loss to break even. Because of the scenario we had where we are bullish unconfirmed, I still wasn't sure if we're maybe possibly looking for buys. I never ended up looking for a buy. I just didn't see enough. And so what I did was when we hit this demand zone, I partialed out 90% of my trade, and wherever that ended up being, somewhere around here. Yeah, we partialed out the 90% of our trade, and I left a runner on. And what I did with the runner is I left the runner to run this low in case it went down, and which is exactly what the rest of that actually did. So by leaving a little bit on the table, we actually ended up making an extra little bit of money. And had I held the trade in full, obviously this would be a 17R. I did not hold the trade in full. Obviously, we've got to pay ourselves given the scenario. Had we been confirmed bearish or confirmed bullish and we were going that direction, meaning we had two highs or two lows, and I knew for sure it was going to continue going that direction, I would have definitely held to run that low. Um, Given that scenario, we did not. I was possibly looking at buying this back up. We did have a slight change of character here, but just because of what was happening, I was kind of wanting to see more. So instead of jumping in on the first change of character, which was a sweep of the lows here, and then you had a sweep of the highs when this candle came up. So ultimately, this zone caused that. You would have just bought here. I decided to wait and see it break structure one more time to the upside, which would have been a break of this, and then I would have looked for a mitigation of that to enter to go the other way, just because of the scenario we had. And yeah, that's ultimately how I framed out GU today. I did try a couple buys and a sell on EU today, and it was two losses and a break even, so that didn't work out too well, but GU did. So this is the one I thought I'd go over today. If you guys have any questions, let me know. I'd be more than happy to explain it. But other than that, it's all pretty basic. Come in, do your 4 hour analysis. After your 4 hour analysis, hit up your 15-minute analysis and try to get that behind your trade some way. Don't just sit on the 1 minute looking for a trade. So, like we did here, we looked for this failed reaction. We got this bearish engulfing candle. We took out the sell to buy wick, so this demand went. So we had some confluence to go to the downside. The only logical thing to do was look for a change of character inside this supply and short it back down. That was the idea behind this trade. And yeah, that's pretty much it. Stay tuned for some more recaps later this week, guys. Have a good day.